Swayam Prabha. Digital India. Educated India.
योगः कर्मसु कौशलम्.
Hello friends, my name is Dr. S.C. Sardar, retired professor, SD School of Commerce, Gujarat University. Today, we will deal with Introduction to Final Accounts of Sole Proprietary Concern Part 2. In the first part of Introduction to Final Accounts of Sole Proprietary Concern, we had studied about meaning and feature of sole proprietary concern. Point number 2, components of final accounts of sole proprietary concern. Purposes of trading account, content of trading account, in which we have taken information about items of debit side with explanation. In this part 2, we will discuss about items to be shown in credit side of trading account, closing entries for preparation of trading account, format of trading account, illustration on preparation of trading account, what is profit and loss account, features of profit and loss account, purposes of profit and loss account, items to be shown in debit side of profit and loss account. Now, we will see entries, items shown in credit side of the trading account. The first item is sales and sales return. Sales means sales of goods and materials which is purchased for the purpose of resale or goods manufactured by the business. Sales account has a credit balance and it includes both cash and credit sales. There can be sales return if goods are not as per sample or defective goods supplied or destroyed goods is received by the customer, etc. It is returned back by the customers and to that extent sales is to reduce. Thus, arrived amount will be net sales and that is disclosed in trading account. Sales is shown on the credit side of trading account. Let us see one example on net sales. Mr. Atul of Ahmedabad sold goods of rupees 10 lakh to Mr. Suresh of Surat. Goods of rupees 1 lakh was returned by Suresh to Atul. GST rate is 12%. Friends, see here it is a intrastate sales because supplier and customer both are from Gujarat state. Therefore, GST is given to us 12%, from that 50% will be allocated to CGST, that is 6%, and remaining 6% will be allocated to SGST for the purpose of accounting treatment. The accounting treatment will be like this. Journal entry in the books of Atul. Since Mr. Atul is a seller, we will see this journal entry in the books of Atul. At the time of sales, we will debit Suresh account by 11,20,000 rupees. Basically, we have made sales of rupees 10 lakh, but at the same time, we have to collect CGST and SGST from Mr. Suresh. At the same time, another important point is the total GST rate is 12%. Therefore, 50% to be allocated to CGST and 50% to be allocated to SGST. So, finally, journal entry will be like this: Suresh account debit 11,20,000 rupees, to output CGST account 60,000, to output SGST account 60,000 and to sales account 10 lakh rupees. But we have written back the sales of rupees 1 lakh. So, sales return account will be debited by 1 lakh and the whatever amount of CGST and SGST you have credited, again you have to debit back, because to that extent we have to cancel the effect of both the taxes. So, sales return account will be debited by 1 lakh rupees, output CGST account will be debited by 6,000, output SGST account will be debited by 6,000 and finally, Suresh account will be credited by 1,12,000 rupees. Friends, see here, in this case net sales is of rupees 9 lakh, because we have total sales of rupees 10 lakh less sales return of rupees 1 lakh. If Atul has made sales outside Gujarat, in this case IGST could have been applied at the rate of 12%. Let us recollect that on every purchase input GSTs are charged and for every sales output GSTs are applicable. Now, let us have a look on the next item of credit side. The second item is closing stock or inventory. It is not necessary that the goods purchased during the year, entire goods will be sold in the current year only. There can be some unsold goods, that is closing stock. This closing stock may be in the form of raw material, work in progress and finished goods. Closing stock is recorded at the end of the year and is shown in the trading account on the credit side. At the end of the accounting year, valuation of stock is inevitable. For valuation of closing stock, convention of conservatism means prudence is to be followed. Friends, you refer chapter number 1 for recollection of convention, concepts and principles of accounting. According to convention of conservatism means prudence concept, stock is valued at cost or net realizable value, that is called market value, but from this both the cost, whichever cost is less, that is to be taken into account. Let us understand this prudence concept with the help of one example. For example, if we are having closing stock of rupees 2 lakh, but its market value is rupees 1,90,000. As per prudence, closing stock will be recorded at rupees 1,90,000. According to prudence, probable loss is recorded but not probable gain. Value of closing stock is generally provided outside trial balance. As we know that the closing stock is always disclosed outside the trial balance. Therefore, to incorporate closing stock value in the final accounts, we have to pass one journal entry, and that journal entry is like this: closing stock account debit by rupees 1,90,000 to trading account 1,90,000 rupees. In case of a trading business, closing stock is of finished goods, but in case of manufacturing concern, closing stock is of raw material, work in progress and finished goods. Closing entries for preparation of trading account. Friends, during preparation of final accounts, in accounting we have to pass certain closing entries for preparation of trading account. Before preparation of final account, trial balance is prepared. Trial balance covers balances of all revenue incomes and expenses and all capital incomes and expenses. All goods related revenue incomes and expenses are transferred to trading account, and non-goods related revenue incomes and expenses are transferred to P&L account. All capital accounts are transferred to balance sheet. But while preparing a trading account, it should be kept in mind that closing journal entries are passed in journal proper. Closing journal entries means a transfer of all goods related accounts to trading account. The closing entries are. Now friends, we will deal with opening stock, purchases and direct expenses. All these balances are having debit effect, and now we will close this account, and that is why all these accounts are to be credited and will be debited to trading accounts. Therefore, their journal entry will be like this: trading account debit to opening stock account, to purchase account and to direct expenses account. Like that, sales account we are having, closing stock we are having, and that is also to be transferred to trading account. But sales and closing stock always showing credit balance, and to close their accounts we have to debit their accounts. Therefore, sales account is debited, closing stock account is debited and trading account is credited. Then after, we will have balancing figure of this trading account in the form of gross profit or gross loss. When you are having gross profit, in this case trading account is debited and P&L account is credited, while in case of gross loss, P&L account will be debited and trading account will be credited. Friends, now let us have a look on format of trading account. Friends, trading account is showing the information of the entire year. Therefore, its title will be like this: trading account for the period ending on 31st March 2025. Since it is an account, it will have two sides, debit side and credit side. First of all, we will have a look on the items of debit side. As we have discussed, the very first item of debit side of trading account is opening stock. Second item is purchases, and from these purchases we have to deduct the purchase return. Purchase return are in different form. Purchase return can be done due to defective goods or goods not as per sample, and then after other way of outward of goods are goods donated, goods withdrawn for the personal use, less goods distributed as sample. Now see friends, these three items are goods outwards other than purchase return. This is very important to keep remember, kindly keep remember this item. Then next item of debit side of trading account is to wages and salaries, to direct expenses, to carriage inward, to freight and cartage inwards, to factory power or electricity or fuel. Now we will see the items of credit side. The very first item of credit side is sales. From that we will return sales return. Yes, another point which is to be kept in mind is there can be some goods may be of not use to be discarded and to be removed on the factory, but it is possible that we can realize some amount by selling this in the form of scrap. Therefore, if you are going to realize any amount, then it is to be credited over here in the form of scrap sales. Closing stock. Friends, another item of credit side which we have displayed over here is abnormal loss of stock. Friends, during functioning of business there can be loss may be due to accident, due to flood, due to rain. These are all losses but are known as abnormal loss. These are not the losses of a business. Therefore, to that extent we have to credit the trading account, and this loss ultimately we have to transfer to profit and loss account. Now, after recording all these entries of debit side and credit side, we will have balancing figure either debit side or credit side. If we are having balancing figure at credit side, that is known as gross loss. It means the total of debit side is more and the total of credit side is less, and this loss we have to transfer to profit and loss account. In second case, if the total of credit side is more, then we will have difference at debit side, and that will be our gross profit, and this gross profit also we will transfer to profit and loss account. In brief, in trading account, balancing figure will have either gross profit or gross loss. As I have given you brief information about the balancing figure, let us have a re-look on balancing figure of trading account. The balancing figure are known as gross profit or gross loss. After recording the above items in the respective sides of trading account, balance is calculated to determine gross profit or gross loss. If total of the credit side is more than that of debit side, excess is gross profit. If total of the debit side is more than that of credit side, excess is gross loss. Gross profit is transferred to the credit side of profit and loss account, and gross loss is transferred to the debit side of profit and loss account. Let us see one illustration on preparation of trading account with closing entries. Let us prepare trading account from the given information of firm of Mr. X. Preparation of trading account for the year ending on 31st March 2025. We are having information. Let us see all this information. The first item we are having cash purchase of rupees 1,50,000, credit purchases of rupees 9 lakh, return inwards, that is known as sales return of rupees 20,000, cash sales of rupees 1,60,000, credit sales rupees 11 lakh, return outwards known as purchase return also rupees 10,000, freight inwards rupees 3,000, carriage inward rupees 3,000, wages and salaries rupees 4,000. Opening stock we are having of rupees 1,50,000. Now friends, this it is shown to you in the red line. Closing stock is of rupees 88, but its net realizable value means market value is 84,000. This is very important point, and you just try to recollect. I have explained this point to you few minutes back. Now we have to pass the journal entry for all this. First of all, we will record the entry for the all items which are to be appear at the debit side of trading account. So here trading account is debited by rupees 12,30,000, and now all items which are appear at the debit side are to be credited over here. So, to opening stock account we will credit 1,50,000 rupees. To purchases account we are having total purchase of rupees 9 lakh plus 150. So, 10,50,000 will be credited over here. To return inward account rupees 20,000, to wages and salaries account 4,000, to carriage inwards account 3,000, to freight inwards account 3,000, being the transfer of accounts to the debit side of the trading account. Then we will have information of credit side. So, sales account will be debited by rupees 12,60,000 because we are having debit sales and cash sales. So, 11 lakh plus 1,60,000, that comes to 12,60,000 to be taken into account. Return outwards also to be debited 10,000 rupees, and finally, trading account will be credited by 12,70,000, being the transfer of sales and purchases return to the trading account, we are transferred to the trading account. Then we are having closing entry for closing stock. As I said you that we are having book value 88,000, but market value is 84,000. So, as per the prudence we have to consider the less value, that is 84,000, that is our probable loss. So, closing stock will be debited by 84,000 and trading account will be credited by 84,000 rupees. Friends, when you will prepare your trading account, here total of credit side will be more, and that is why we are having profit of rupees 1,24,000, that is to be debited to trading account, and the same amount is to be credited to profit and loss account 1,24,000, being the transfer of gross profit to profit and loss account. Friends, as per the norms of accounting, we have observed closing entries which are to be recorded in trading account. Now, we will prepare trading account. Trading account for the year ending on 31st March 2025 of Mr. X. First, we will look on debit side items. The first item is opening stock of rupees 1,50,000. Then we are having two types of purchases, cash purchase and credit purchase. Both are to be recorded at the debit side. Ultimately, we will have total purchase of rupees 10,50,000. Out of that, we have returned back 10,000 rupees goods. Therefore, the net purchase which we are having is of rupees 10,40,000. Then we are having freight inwards of rupees 3,000, carriage inward of rupees 3,000, wages and salaries 4,000 rupees. Now, friends, we will have a look on the items of credit side. The first item is of sales, and sales again of two types, cash sales and credit sales, that comes to 12,60,000. From that, we have to reduce the amount of sales return, which is of rupees 20,000. Ultimately, we will have net sales of rupees 12,40,000. Now, again closing stock. See here, closing stock is of rupees 84,000. As I told you that we have to follow the prudence concept, where the stock is valued at rupees 88,000 rupees, it is its book value, it is its cost value, but its market value, its realizable value is 84,000. Therefore, we will take into account the probable loss, not probable gain. Finally, we will record the value of closing stock at rupees 84,000. Then finally, have a look that total of credit side is 13,24,000 and we are having difference at debit side of rupees 1,24,000. It means the total of credit side is greater than the total of debit side. Finally, 1,24,000 is our gross profit and that is to be transferred to profit and loss account. Now, friends, so far we have acquired information about trading account, which is the first component of final accounts. And now, we will see second component, that is profit and loss account, which is known as income statement. And now, along with this, we will see the items which are to be recorded in profit and loss account. First of all, let us try to know what is profit and loss account. It is second component of final accounts. It records all those revenue transactions which are not recorded in, be careful, revenue transaction which are not recorded in trading account. The ascertainment of gross profit or loss is done by preparing trading account, where direct cost and direct incomes are considered. On the other hand, net profit or net loss is ascertained by preparing profit and loss account, where indirect cost and indirect incomes are taken into account. Profit and loss account starts with the gross profit on the credit side if we are having profit in our trading account. And in case of gross loss, it starts with the gross loss on the debit side, which we have transferred from trading account. Thereafter, all indirect expenses and losses are transferred to the debit side of the profit and loss account. Indirect incomes and gains are transferred to the credit side of profit and loss account. The difference of this account is net profit if the total of credit side is more than that of debit side. In the reverse situation, difference means net loss. This difference means net profit or net loss is transferred to the capital account of the proprietor. Net profit increases the capital and net loss decreases it. Indirect incomes are those incomes which are not directly associated with sales of goods, such as interest, dividend, profit on sale of fixed assets or investment. Next, for better understanding of profit and loss account, we will see features of profit and loss account. It is second component of final accounts. Second is accrual base is applied for preparation of profit and loss account. Under accrual base, transaction of previous year and next year not considered. Trading account deals with the direct incomes and direct costs, and profit and loss account deals with the indirect incomes and indirect cost. Any difference or balance in this account will be either net profit or net loss. This is net earning or net loss of the owner. Net profit or net loss directly affects the capital of the owner. Net profit is added to the capital and net loss is deducted from the capital. Now friends, we will see next point about purposes of preparation of profit and loss account. Let us understand purposes. Purposes means need of profit and loss account. Profit and loss account is prepared due to certain reasons. Number one is to determine net profit or net loss. Number two is for comparison with the results of previous year. Third one is for determination of tax liability. Fourth one is to know the proportion of indirect cost and to control excess indirect cost in the next year if any. So, this is very important. If you are having any excess amount than your projection, then you can exercise your control to reduce this in the next year. Now friends, we will have discussion about the content of profit and loss account. Content or items of profit and loss account means the entries or items shown in the debit side of profit and loss account. The very first item is debit balance of trading account, means gross loss. If there is a loss in trading account, it would appear at debit side of profit and loss account. Second is salaries. This is very important point friends, we will see subsequently. Salaries are paid for the services of the employee and are debited to profit and loss account, being indirect expense. Now see here, direct salary, for example, salary of the factory manager, salary of purchase manager is charged to trading account because it is a direct expense. Sometimes a combined account titled salaries and wages account is maintained in the books. See here how it is to be recorded. Salaries and wages account is debited to profit and loss account, considering it to be indirect expense, being salaries paid to office staff. But on the other hand, if account maintained is wages and salaries account, it is transferred to trading account, considering it to be direct expense being paid to manufacturing and or trading staff. Next item is office rent, then office electricity, printing and stationery, postage, courier and telephone, legal expenses, audit fee, general expenses are also indirect expenses and debited to profit and loss account. Salesman commission, it is a sales related expenses, thus treated as indirect expense. Friends, see here, freight and carriage on sales, that is carriage outward. This is the part of profit and loss account, but carriage inward is always part of trading account. Freight and carriage paid on sales is an indirect expense, but see here it is a repetition to remind you this, but carriage inward is direct expense and is debited to trading account. Delivery vehicle expense, expenses incurred on delivery vehicle are expenses for delivering the goods sold. It is an indirect expense. Insurance expense, insurance premium paid for insuring the assets, finished good, stock etc. are indirect expenses. Selling and distribution expenses, this include expenses on advertisement, go down charges, packing charges, discount allowed etc. Interest on borrowed capital means loan. This is also interesting point. You are borrowing the funds from the external sources and you have to pay interest on it. So, whatever interest you are paying on this, that is your expense, this is your indirect expense. Let us see this. Loan is taken by the firm to make up the deficiency of capital. Interest paid on such loan is an expense and is also indirect expense. Bad debts, it is a loss of credit sales which is not recovered. Then we are having depreciation. This depreciation is very important expenditure. It is always in the non-cash form. So, that is why it is known as non-cash expenses, but it is a indirect expenses. Depreciation is the cost of fixed assets written off over the estimated useful life. It is a fall in the value of the assets due to its wear and tear or use or lapses of time. Loss of goods by fire or theft or damage. Loss of goods by fire or theft or damage being a loss for the businesses is debited to profit and loss account. In case of goods are insured and insurance company has admitted case, at that time insurance company account is debited. If the goods are not insured, loss of goods by fire or theft or damage account is debited. Any other revenue expense or miscellaneous or general expenses, miscellaneous or general expenses are expenses and debited to profit and loss account. Friends, in this part 2, we have acquired information about items to be shown in the credit side of trading account. Number 2, closing entries for preparation of trading account. Number 3, format of trading account. Number 4, illustration on preparation of trading account. Number 5, what is profit and loss account. Number 6, features of profit and loss account. 7, purposes of profit and loss account. 8 number is items to be shown in debit side of profit and loss account. Profit and loss account related other information we will discuss in part 3. Keep on refreshing part 1 and part 2. We will meet for part 3 very soon. Thank you.